Lending decisions where a credit score's used, there's lots of things that can affect an individual's credit score. So the presence of missed payments perhaps, the presence of a county court judgment, the presence of a voluntary arrangement for bankruptcy, things like that, credit utilisation in general.
Yeah, I think there was something that I missed in the past which kind of impacted on my record, credit file, and that keeps coming up and impacting on ability to borrow money.
I struggle with some of the decisions that have been made. For instance, why does a missed payment stay on someone's record for a period of 6 years? Why would any specific type of borrowing be of interest or mark against you, such as payday loans? It's a rather arbitrary figure, 6 years, but that is the period of how long a county court judgment will stay on your record for. But missed payments, I can't see why they would stay on your payment history for a really long period of time, for perhaps one bump in the road that you missed in the last, say, 6 or 12 months.
It was a payment that it was not done in 2011. The loan was not my name, that was in somebody else's name, because this person moved to another country, and that contract was on the person's name, and I was in the house, in the property, so they put me in bad record, even that contract was not on my name, but it was in my property. That person actually spoiled my credit record, and I've been carrying that since 2011.
Typically, a county court judgment, or CCJ, is an amount that you've failed to pay, and that's been bought against you by one of the people that you may have borrowed from or had supply from. There are over 7,000 county court judgments registered each month in the UK, and there is a tendency for those to be quite small value in some instances. So things like phone contracts, missed utility bills, when you move house, etc. Those sort of things are typically how a CCJ can be bought out against you. And as lots of people are renting and they do move address, sometimes those can go totally unnoticed until you make an application for credit, or indeed an application for an insurance product, or anything that goes back to one of the 3 bureaus in this country. Interestingly, a lot of the consumer credit industry will just decline you and point you towards one of the 3 credit bureaus for further details. But where individuals are made aware that they were declined for a county court judgment, typically there's 2 things that they can do. First of all, they can contest or they can satisfy that CCJ. But I think the important thing is that there needs to be a change in how county court judgments are viewed by the credit industry. And that's something that the FCA are currently looking at in their review of the credit industry that's currently going on.
I felt really bad that some silly mistake had lasted, well, was going to last quite some time. It was just a matter of how to get out of the situation and put everything right. It's taken, I'd say, a good 9 years to get that situation rectified, just for one silly mistake.
So I'm going to get on my soapbox here. I'm staggered that a satisfied CCJ doesn't count for more in a person's credit score than an unsatisfied CCJ. For instance, if you settle a CCJ within 6 months, why doesn't that make your credit score go up? Because you've recognised the problem, you've settled out your debt to the supplier or the party that's bought it against you. That should count for something, but currently that doesn't work. And again, with this whole process where consumers aren't notified for the reason or the content of their decline, you get this sort of continuum of county court judgments just occurring and not being satisfied. I mean, we as lenders have a responsibility to tell people why we can't lend to them, and that should include whether they've got a satisfied or unsatisfied CCJ.
We're looking at what their financial situation is at the time of the application. That can be things like what their current income is, if they're supported by sort of any secondary income, or if they're in receipt of any benefits at the moment. We'll also be looking at things like general outgoings, so what their priority bills are like, if they're able to maintain a good positive direct debit history. We'll look for things like existing credit on their account, and there's also a few other things we can look for, like gambling spend, if they have a good amount of disposable income before they apply with us, but essentially just to see if we think the repayments could be affordable, and if we're not going to put them in a more difficult position by lending to them.
So any reported credit agreement, or indeed utility payment, or indeed insurance product, one missed payment will have a huge factor on your credit score. I think it's really important that if you hit a bump in the road, you report that to the bureaus about your overall position. So if you lost your job, or you'd had some form of illness, long-term illness, if there was a genuine reason why you couldn't meet your financial commitments, I would ensure that you report those as soon as possible to the 3 bureaus. And that's what's called a notice of correction. I think we've talked about this before. But I believe that consumers should seek debt advice far sooner in the process. There is a stigma, we have spoken about it, where if someone gets into financial difficulties, it's the perception of the borrower that it's their fault, and it's not their fault. This is just life, and it's caught up with them. But there are real pressures now on lenders to make and extend the olive branch to those individuals. Consumer Duty, which came in last year, which is an FCA process which ensures that all lenders or providers of financial products are looking very sympathetically at what's in the best interest of the consumer. And I think that's really important, because the sooner a lender knows about a problem, the sooner it can give you a way out of that problem. But debt advice is something that we don't see taken up by enough people. And I think there are many great agencies out there that you can turn to that can just sort of stop, pause, and give you some time to think.
We have the confidence of knowing that we're always doing the right thing for a customer. So although it can be really difficult hearing someone's story about why they're not able to maintain their payments, being able to help them, being able to give them a payment break or lower their payments for a few months helps the blow of hearing that story. You feel like you are helping people in real time.
One of the things that we look for in the open banking that we receive from our applicants is a sort of consistency, so consistency of income, consistency of repayments. Cash is an interesting one, so big cash withdrawals can create more questions. A lot of the times where there's not enough transaction data within the open banking, it's hard for us to make a decision. In those cases, we'll go to a referral process. Our customer account management team will talk to a customer and try and understand that. A lot of the customers that we speak to say, it's because I pay my bills using cash, which I can understand in some circumstances. So a lot of customers will try and put those things onto a direct debit, and in fact that helps them in the longer term. But yeah, large cash withdrawals do create a bit of a query in the way that we look at consumers.
People may have had experiences in the past which put a mark on their file, but then they have learned from it, and their current situation is completely different from maybe 10 or so years ago.
A lot of the customers that we see applying to us have paid for or are paying for a credit building product. And we see in some cases they have 2, 3, 4 of those products. And in fact, a sample that we did back in December of last year, 2023, showed that our applicants were spending almost £1 million a month on these credit building products. I don't believe those products offer any value to a consumer other than an understanding of what their credit score is. But you certainly can't move the dial and rid yourself of a CCJ or a missed payment and improve your credit score just by paying into one of these products. Quite frankly, they're an area that the FCA need to look at, but I don't believe they're going to move the dial for consumers in any short period of time. It takes years to move credit scores through standard practice. So the advice I would give people on being aware of county court judgments is a lot of our applicants are tenants in the private rented sector and in the social housing sector. It's worth investing in a mail forwarding service from Royal Mail. I don't know how much it is, I don't think it's a lot of money, but if for instance you do move house and your old utility provider sees a balance of a couple of £100, they may take a county court judgment out against you. That CCJ will stay on your file for up to 6 years. So I think the investment of a mail forwarding service from Royal Mail is probably very valuable for people who are renting and are moving house. We do see, and Registry Trust, who manage that whole county court judgment file, see a larger number of lower value CCJs now being registered against people. So I think, a really good piece of advice is if you're moving house, get a mail forwarding service.